Price action, smart money concepts. This is a popular trading method based on price action. It could be a little challenging for traders to correctly identify the levels, but in this video, I want to introduce a powerful indicator on TradingView that effectively help you to identify levels related to smart money concepts method of trading. Just make sure you watch this video until the end and let's get started. Before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, now let's add the indicator. But before that, here we increased or decreased the scaling a little bit. So later when the indicator is added, it will not contract the chart. Alright, here we click on indicators and we search price action, smart money concepts. This one, which is written by Big Beluga. Alright, this is the indicator, and as you can see, some levels and information are added to the chart. Before I start explaining them, I'm proud to announce that recently I published a book, The Art of Price Action Trading, which is a comprehensive guide to classic price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, getting back to our indicator, let me explain what we have here and how you can use it for trading. Many of the concepts in SMC method of trading are derived from the classic price action trading concepts, but here they are viewed from different perspectives and they are labeled differently. First of all, we have some concepts that are related to market structure. As you know, the market has a structure. It is either trending or not trending. When it is trending, it is either trending up or trending down. When the market is trending up, the price makes higher highs and higher lows. This is the structure of an uptrend. And as long as the price makes higher highs and higher lows, we can say that the market is trending up. When the price makes a higher high and then goes for a pullback, this high is a potential resistance level and it can act as a barrier for the price action. When this high is broken and we get a candle closed above this level, it is called break of structure and it is shown by BOS, and this gives us the signal that the price is probably going to advance more. On the other hand, when the market is in a downtrend, the price makes lower highs and lower lows. This is the structure of a downtrend, and as long as the price makes lower highs and lower lows, we can say that the market is trending down. When the price makes a lower low and goes for a pullback, this low can act as a support level and the price may get difficulty to pass this level. When it is broken and we get a candle closed below this low, it is a signal that probably the price is gonna decline more. It is called break of structure and it is shown by BOS. Of course, not all of these BOS signals are profitable and we can have a false signal when a reversal is happening in the market or the market is going to a trading range. That is why we don't trade solely based on this, and we need also other confirmation like volume confirmation or formation of price action patterns or considering other important levels like support and resistance, order blocks or fair value gaps, and usually a mix of concepts is used together in a trading strategy, which later I will teach you how you can do it. Alright, another concept related to market structure is change of character, which is actually a signal for ending of the current trend and probably starting of a new trend. As I said, when the market is in an uptrend, the price makes higher highs and higher lows. When the price cannot pass the previous high and it is not able to make a new higher high, this is a signal that the uptrend is weakening. But when the last higher low is broken and we get a candle closed below this level, this shows that the structure of the uptrend is already broken and probably the price is turning to a downtrend. In SMC trading method, this is called change of character and it is shown by CHOCH. On the other hand, when the market is in a downtrend, the price makes lower highs and lower lows. And when the last lower high is broken and we get a candle closed above this level, this shows that the structure of the downtrend is broken and probably the price will turn to an uptrend. Here you can see that the price went to a trading range and after that the price turned to an uptrend. As I mentioned earlier, other confirmations like volume confirmation or formation of price action patterns, or considering other important levels like support and resistance levels, order blocks, or or fair value gaps should also be considered, and usually a mix of concepts is used in a trading strategy, which later I will explain it. Alright, another concept that is shown by this indicator is order block. These are order blocks that are identified on the price chart. In case if you don't know what order block is, order block are price ranges where actually high amounts of orders are executed. Actually, they are areas of the price where large market participants like institutional traders, banks, or hedge funds have placed large amounts of orders, so causing of significant price movement in the market. So as I mentioned earlier, order blocks are price ranges where there has been large amounts of orders executed. Order blocks can be identified by the help of some price action patterns, but in practice it is not easy, and only experienced traders can correctly identify order blocks on the price chart. But there are some indicators that can help you on this, and this indicator also provides information about possible order blocks on the price chart. And one excellent feature of this indicator is that it provides a volumetric order block, which means that for the identified order block on the price chart, it also provides volume data, and the buying and selling volume are shown separately, so we can effectively analyze the volume for the identified order block. The green bar shows buying volume and the red bar shows selling volume. For example, here for this bullish order block, you can see that we have considerably higher buying volume in compared to selling volume, which makes it a stronger order block in compared to, for example, this bullish order block, which the selling volume is higher than the buying volume. For a bullish order block, the higher the buying volume, the stronger is the bullish order block. So for example, if we are comparing these order blocks, this is a good one, this is also a good one, but this one not so good and probably not an effective level for the future price action. Order blocks are significant levels of the market for the future price action. Order blocks create imbalance between supply and demand, and they affect the price considerably, so for the future price action they can act as a support or resistance level. When they are mixed with other price action concepts, like for example change of character or break of structure, it creates a powerful base for you to take your decision. For example, this BOS signal that we have here is a high probability signal by considering the change of character signal that we had here and also the order blocks that formed here. Alright, this indicator also shows fair value gaps. You just need to go to the settings of the indicator, and here in this part you can add fair value gaps to your chart. Alright, now we have fair value gaps on our chart. Here, these are fair value gaps that are added to the chart. In case if you don't know what a fair value gap is, a fair value gap forms when we have 3 consecutive candles where there is a gap between the shadows of the first candle and third candle. This gap is left by market imbalance, and this is usually considered where the institutional traders were active and created imbalances in the supply and demand. You can use fair value gaps for confirmation of breakouts, or it can also act as a potential support or resistance level. For example, here, if you remember, I said that this break of structure signal that we have here is a high probability signal because we had change of character here telling us that the downtrend probably ended and maybe an uptrend is going to start. And then here we got order blocks showing large amounts of orders executed at these levels, and they caused significant change in the direction of the price. And then we got a breakout here, a BOS, break of structure signal, and after the breakout we got fair value gap, which shows imbalance and a shift in the upside pressure. So you can see how many confirming signals we have here that we got starting of an uptrend. As I mentioned earlier, fair value gaps can also act as a support level. Here you can see that we got a pullback exactly to the fair value gap, and then a signal for break of structure, BOS signal here as you can see, and just look how sharply the price advanced after that. This is also a high probability signal because of this pullback to this fair value gap. So this is how you should use different concepts of price action where you have different confirming signals for your trading decision. Please pay attention that no trading strategy or method can give you guaranteed signals, and losing positions are always part of the game, and you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's recommended by professional traders. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.